It is obviously, it's a crazy time in agriculture. Let me start with a few. A lot of you I know have maybe know who I am, have heard me before. I will get the obvious question as I tried to just ignore it in a couple of talks, or the half dozen talks I've done in Ohio over the past couple months. I am no longer at Ohio State. I was there 15 years. I left on December 31st. I started a consulting company. I'll talk about that more in a second. I knew that leaving Ohio State would create some questions. Leaving the College of Agriculture would create some questions. I had no idea when I left it on December 31st those questions would extend, or those repercussions would extend to the Fiesta Bowl. So I'm sorry. Like all Ohio State fans, I just am really glad that Mariah Carey kept us from being the worst performance of the night, right? What is this thing I have here? It's called the Kernmantle group. Right now it's a group of one, but my mathematician friends assure me a group can have one, so I'm still acceptable. Basically, to make a long story short, I'm continuing to do the work I did as a state specialist at Ohio State, and that is training and education surrounding grain marketing and commodity markets, and what I'll call applicable research. One of the points of contention between me and my previous employers were the value of research and where it goes and who's good at what and who's not. So it's applicable research. It's stuff that can be used. As far as I'm concerned, I'm still Ohio's specialist in grain marketing education, even if I'm not our grain marketing education specialist. So what you'll see, a lot of the work that I've been doing over the past couple of years, starting in about a month, I will be creating online grain marketing classes, courses, one-offs, and longer ones, starting with kind of beginning grain marketing courses and moving on from there. So keep an eye out for that. My website is kernmantlegroup.com, where I have a mishmash of a lot of different things. Twitter is, if you're on Twitter, that's my Twitter handle. So sorry for the self-promotion. That is the way it works. And, you know, as an aside, frankly, it's always been, I've always thought there was a subtle irony in coming out 50 or 60 times a year and talking to you guys about risk management as a tenured professor, pretty much the most riskless profession on earth. So here I am. Okay, so where are we going? We know, so Harold asked me to come in. This is a soybean session, talk about acreage shifts. That's in the news. I'll talk a little bit at the end also about some broader things, but really about acreage shifts and what that means, or acreage shifts in the Midwest, the trends, what's driving it, and where we think we're going. Current USDA numbers. So at the USDA Outlook Conference 2 weeks ago, USDA projected 91 million acres of corn planted this year. That's a 3 million acre decline from last year. And 88.5 million acres of soybeans. That's a 5.1 million acre increase over last year, and is a record level. Okay, why? What are these driving factors in this big acreage shift? And obviously, we saw wheat decline, wheat seedings decline, 4 or 5 million acres in the fall. We're expecting to see cotton go up. And these are still very preliminary. These, are not survey-based. These are entirely based, USDA projections based on relative prices and profitability of the crops. So what are these driving factors? Ultimately, the driving factor is profits. Okay, the driving factor is profits. Let's be really honest. From 2005 to 2014 was a period of nearly unmatched profitability in row crop production. Okay, lots and lots of money being made in row crops, lots of profits being made. A lot of that got capitalized back into land prices and bid into rents. Okay, now we're at a place where those same demand factors that really drove prices up are not there driving prices as high, yet our input costs have gone up and seem to have remained up, particularly the land and the rent input costs. So we take that high cost structure, prices have come back, people are paying a lot more attention to those relative profitabilities of the crops. We look at corn versus soybean price ratio. It's, of course, where we always like to talk. Right now, new crop, 2.56. 2.56. That is higher than it's been in recent years. The other big factor we're going to see as we go along is lender pressure. When I talk to lenders, when I talk to bankers, when I do education, and probably 30% of the talks I've done in the past 3 months, talks I've given, have either been to bankers or been by bankers, have been sponsored by bankers. And so in talking to them, the general rule of thumb is only about half of their clients made money in the 16-17 marketing year. Okay, only about half they think will make money in 16-17, and about a quarter of their clients didn't make money in the previous marketing year. Okay? So there's a lot of growers out there who have not been cash flow positive. This may be the second year in a row. Second year in a row. And so there's a lot of lender pressure. We have started to see bankruptcies. Watching the farm press. Now these are they're pretty narrow. We're not seeing massive amounts, and there's a certain look to those farms that have gone bankrupt. And that look is 10 to 15 to 20,000 acres, very aggressive, 90%, 95% cash rented, a lot of growth in the last 10 to 12 years. A lot of turnover of paint, high standard of living. There are some factors there. But it all highlights what ultimately drove them bankrupt was cash flow. In fact, cash flow is what always drives people to bankruptcy. And so what this highlights is the lender pressure. Talk to bankers, talk to lenders about renewing lines. Those conversations, obviously, a lot of you in this room have been having these conversations. Renewing lines generally going well this year. But the conversations are a lot more awkward than they have been. There's a lot of land debt getting pushed out, a lot of land debt getting restructured. So going back to corn versus soybeans, why does this matter? It matters because the cost of production, the variable cost of production on beans is so much lower. Is simply so much lower. The other thing to think about is soy has a demand story. Okay, soy has a demand story. What's the big driver? Last 15 years. Where is soy's demand come from? China. All right, let's talk about corn. Does corn have a demand story over the past 15 years? What was it? Ethanol. Okay? Just because I like to pick at wounds. How about wheat? See, that's the typical answer, is wheat doesn't have a demand story. I actually disagree. Has anybody seen wheat mentioned in the newspapers? I taught economics at Ohio State for 15 years. You know I can withstand an awkward pause in a room a long time. Anybody? What have you read about wheat in the newspaper? Biggest supply ever, but we're talking demand. I heard it. Gluten. Scientists have found gluten apparently causes herpes. Okay? As far as I can tell, I don't know. See, this is great. These are jokes I couldn't tell at Ohio State, right? Let's totally open that up. So we've got that. We've got this whole gluten thing where apparently half the country thinks that they're allergic to gluten. There's another one, actually. Over the last 15 years, it's really affected wheat. Remember 15 years ago, we had all these people running around telling us the best way to lose weight was eat more bacon? Okay? Yeah, now those are scientists I can get on board with, right? Right? So wheat's had demand stories. The difference is they've been negative demand stories. They've been demand stories about gluten and about the Atkins diet, the high-protein diet, low-carb stuff. So they've been negative demand stories. Beans still has this. We look at ethanol, and although we have a concrete demand story over the last 15 years, it's really tapered off. Wheat, it's only showing up in the press when it's bad. Soybeans are the one bright spot. Okay? So there's a demand story there. We look at corn. You know, corn did, but right now, you look at corn and it's, if anything, we're now worried about how China disposes of its 5-6 billion bushels of stocks. But there's also a related question of will beans continue to? Okay? And that we'll get to. In the I states, Illinois, Indiana, Iowa. So this is fun. I traveled around a huge amount since December 1st. I haven't counted it. I would guess 50 meetings since December 1st. It's been a really active couple of months for me. It's funny what self-employment does. But the interesting thing is in Iowa, when I'm in a room with farmers, they say, yeah, the USDA says that. They look around and I'm not changing. Okay, Illinois, Northern Illinois, they're not changing. They kind of look around like everybody says this, and there was an article out of University of Illinois said this is, kind of poo-pooing this acreage shift. But poo-pooing the acreage shift because the profits just don't justify it. The returns just don't justify it. But there's a difference between the I states. Why do we talk about them? Because their soils are different. Okay, we know that field to field we can have different soils. But clearly, Northern Illinois, Northern Indiana, Iowa, Southern Minnesota have a different relative yields between corn and beans than, say, Ohio or Southern Illinois, Southern Indiana, the Delta, all these other areas. Okay? They have much higher corn yields compared to their bean yields. All right? So in the I states, yeah, we're not going to see a big shift. And you're going to see some articles like that. There have already been a couple. You'll see more where people kind of poo-poo these shifts because of the budgets in Indiana, Illinois, Iowa don't really justify big acreage shifts on a per acre profitability basis. From a lender pressure, they still matter just as much, but not from a not from a profitability perspective. Okay, cost of production of corn is relatively higher, even more so. That's a bigger differential in those states than it is in the non-I states, the non-I Corn Belt states. So again, this is a lender pressure thing, and that's real. Okay, and for what we can complain in this room about rents, about land charges. I was in Minnesota, southern Minnesota in early December, talking about marketing. At that time, beans were trading 2017 beans. We're trading 1040 on the board, or 1030 on the board. Old crop beans were 1020 on the board. And it said you need to be marketing some of these. Okay, the idea that beans just stay above 10 is far from guaranteed. There's going to be a lot of volatility. I'm not saying you want to sell everything, but you need to at least take advantage of this for some of your crop, for your old crop if you haven't. New crop, go ahead and start picking a little off. I had multiple farmers come up after that talk and say, Dr. Roberts, I get what you're saying, why you think 1030, 1040 sounds pretty good, but I'm not profitable at 1030 beans. Okay? Why? $420 an acre? In southern Minnesota, it's hard to square that circle. So lender pressure matters a lot. Cash flow matters a lot. Those costs of production matter a lot in those I states. So don't expect to see much acreage shift in those I states. And in fact, with the weather the way it's been, I wouldn't be surprised to see those I states go more corn in 2017 rather than less, because we are seeing soil temperatures climb. We've seen conditions really good. I was at a meeting 2 weeks ago in northern Indiana, and they had turnout probably 40% below what they expected. And I had 3 of the lenders say, yeah, I've got clients that are out either starting to put anhydrous on or getting their equipment ready to. Okay? Crazy early to think about that, but that's the year that we live in. Outside the I states, so let's talk about these states. And historically, this is where we do see a lot of the year-to-year variation. When we see those big long-term shifts like we saw from 05 to 10, more and more corn getting bid, that was Corn Belt wide. That was nationwide, even well outside the Corn Belt. When we see year-to-year shifts, we typically see it in the non-I states first. So let's talk Ohio cash returns. These are off of Barry Ward's extension crop enterprise budgets. Cash returns $350 per acre for corn compared to $422. These are returns above variable costs. So you're going to have to take your land charge out of this. You're going to have to take your management, what you pay yourself out of this. This is returns above cash, or returns above your variable costs. $350 for corn, $422 for beans. So $70 an acre. And the reason I look at this in this corn-bean comparison is because your land charge is fixed, right? You don't get to go to your landlord and say, I'm growing soybeans this year. I'm growing corn this year, right? Your land is fixed. Your rents are fixed. Your mortgages are fixed. So I don't care about that. Presumably you're paying yourself the same amount. You're not paying yourself based on your rotation, right? So $70 positive towards beans. We look at variable costs. Soybean variable costs are half of corn. Half of corn. Again, from a cash flow perspective, we're talking about worries from lenders. We're talking about people that don't have the float that they did. That makes beans a lot more attractive. Okay? So what do I think? Those numbers, they're reasonable. I think from this point, I think using those USDA numbers as kind of your baseline is a reasonable place to start. 3 more million acres. 4 more million acres. 5 more million acres of beans. Maybe 6. 2 to 4 million fewer of corn. Okay? That's happening this year. The details as we go farther down from those broad numbers is going to be driven primarily, let's be honest, by weather from this point on. Okay? I do think that there's an intrinsic faith in corn. I continue to believe that among yourselves and your colleagues, that people have a faith that corn tends to bail them out in a way that beans don't. But I find when faith comes up against lenders usually win. Okay? So I tend to think that those numbers are realistic, but it's going to be Ohio. It's going to be southern Indiana, southern Illinois. It's going to be Kansas, Dakotas. That's where we're seeing, that's where we will see that shift. We're not going to see it in those central states. So if you see those articles, don't worry. Longer term, I think, or longer term. So this is an article that Carl Zuloff wrote. I thought I cited it. Yeah. For Farm Doc Daily, November 17th last year. 2010 to 2016, corn has averaged 3.3% per year yield growth. 3.3% per year. Now, one can argue, and I don't think it's unrealistic, that maybe that is that short of a time, and we had early on in there some bad years and later on some record years. That might overstate it. I might be more comfortable saying 2% is a better long-term average than 3.3%. But consumption growth from ethanol is about 0.5% per year. Okay, so 0.5% of the entire crop. So in other words, yield was growing 6 times faster if we held acreage steady, 6 times faster than ethanol growth was. Now, we've had some livestock growth over this same period of time. Livestock consumption growth. We are seeing that. We have seen it take up a lot of this additional, soak up a lot of this additional supply. But part of that is also driven by, think about what happened in 2008. Think about the sharp fall in livestock, in feed consumption of corn due to those higher prices in 7, 8. And it's really kind of recovering from those numbers. So I think that it is being even a little overstated. The point is, yield growth in corn is happening faster than demand growth in corn. All right? And long term, as we talk about relative acres in corn versus beans, the question is, where does this demand come from in corn? We'll see in a little bit. Export demand has not grown over the past 30 years. Feed demand has grown, but not at the rates yield has grown. Ethanol grew for a while. It's still growing, but it's growing much more slowly. So corn, I believe, is moving into an era in which its yield growth is outstripping its demand growth. And so does that mean we are consigning ourselves to perpetually lower corn prices? We can turn to beans. Beans have China. And we pick on China. We talk about China. But in reality, it's not just China. It's Indonesia. It is South Korea, Japan, Taiwan. Holy cow. The list of countries becoming more wealthy, adding protein into their diets. Soybeans have that. Soybeans have that corn does not. And that's important. Okay? In fact, and again, we pick on China a little bit, but I think it really kind of makes this point clear. That blue at the bottom is swine consumption. That is not imports. That is total consumption of pork in China from 1975 to 2016. Massive, massive growth. The orange is chicken. The green on top is beef. And so we actually have seen in the last year or two, we've started to see some beef, real signs of beef demand growth in China. Obviously, we can see it here. This understates it a little bit because a lot of the beef goes through Hong Kong, which is broken out. But you get the idea. There's a lot of growth here. A lot of growth here. Sorry, joke, forgot it. All right, as long as we have it. So, you've heard the setup of the joke before, which is China is the world's largest importer of pork. They're the world's largest producer of pork. They grow over half the world's hogs in China. So they raise more hogs in China than the rest of the world combined. And this isn't 5 sows behind the peasant's hut. These are the largest, most sophisticated operations in the world going into China. You guys would be totally amazed how fast you can expand animal agriculture when you can imprison environmental activists, right? Makes the permitting process so much easier. North Dakota actually has its own solution. They are actually working on legalizing just run over the protesters. Apparently imprisonment's harder in America, so we'll just go with vehicular homicide. Great thing about, this is real by the way, great thing about 2017, there's no longer a need to lie for humor, right? The world is funnier than we can even make up. But if you're going to raise that many hogs and birds and everything else, you got to feed them. This color, this kind of unfortunate yellow-green color right here is soybean growth, or soybean consumption in China. Massive, massive growth starting here in the mid-90s as their domestic protein demand took off, as their domestic animal production took off. And here's the key thing. We look at this, we look at that meat growth. China has a long way to go in their meat consumption increase. Because not only is it pure pounds per person, remember, we start out pounds per person, and then what happens, we get a little wealthier, we start worrying about quality of those pounds, right? We go from meat. I heard a talk a couple of weeks ago, it was fascinating, of a meat specialist, or meat analyst, who talked about Chinese have a particular fondness for cartilage. That's not the part of the animal I usually think about it, but that's the feet. Hog's ears. In fact, there was a time in, I think it was 2014, where briefly hog's ears were were being sold to China at $7 a pound. Right? For the ear. Okay? They'd thin slice it, fry it, it's freaky. But as people become wealthier, they go from eating all those non-muscle cuts, they go to eating muscle cuts, they go from non-muscle in chickens to maybe some of the dark meat. Eventually they'll move to the white meat, they'll move to some pork. Then maybe they get their first taste of beef. Then they realize the beef that they had first that they liked so much, that was just pot roast. And then they get a pork tenderloin and they start giving names to all of these other meats, right? And so then it's sirloins and then Chateaubriand, and it just kind of moves up. And you get rich enough, you start eating nothing but organic tofu, which I don't understand, but that's the circle. So there's a lot of demand left, growth left here. So soybeans have this. Soybeans have a story. Even these big harvests we've had in the United States, our stocks-use ratio has declined third year in a row. The number in the box here, this is the stocks-use ratio. The height of this bar is total bushels in global inventory. So even though our stocks this year are higher than they were 2 years ago in 14 or last year in 15, the growth, which is this orange line, the growth has been fast enough that it's actually outstripped this. And this is something people need to remember. For as much as we hear about a 400 million bushel carryout domestically in beans, that means something very different when a large harvest is, or when a harvest is 4.5 or 4.7 billion bushels than it was when it was 3 billion bushels when I started at Ohio State. Okay, we got to focus on percentages, not total bushels. And so globally, demand growth has been so fast that even with what we've had the last couple years, relative inventories have continued to decline. Domestic crush in beans, here's another crazy thing. In beans, the biggest winner of the renewable fuel standard over the past year and a half has been beans, bean oil. The advanced biofuel mandate basically can be met most easily. The advanced biofuel mandate says this is a biofuel that has at least a 20% greenhouse gas reduction compared to, 50% greenhouse gas reduction compared to baseline gasoline, and is not made from corn. Cheapest way to meet that mandate is biodiesel. So a lot of oil, bean oil, fats and oils, a lot more getting converted to biodiesel in the United States. A lot of imports from Argentina at the same time. But what we're seeing is crush capacity running at very high utilization rates. Let's think back 15 years ago. Think back 15 years ago. When I started at Ohio State, it's easy to remember, my first day on the payroll was September 10th, 2001. Okay? Easy to remember. Back then, the conversations around soybeans were our domestic industry. We were tearing down crush facilities and shipping them to China and to South America. We were consistently dismantling them. The conversation at the association level, both state and national, the question was, how many acres of beans will we have left in 10 years? Because all we heard about were those 300 million acres in Brazil waiting to come into production. We really thought by now we might have a 30 million acre soybean industry. We'd grow all the corn, South America would grow all the beans, and basically our domestic industry would really decline. And yet here we are. We're now building new crushing facilities, both in the States and in Canada, oilseed crushing facilities. Soybean exports, again, this is this single big bright spot in America. Massive growth, 50% growth since 2012. Now again, that was kind of a rough year, so we go back to 2010, we were at 1.5 billion bushels. We're now up to 2 billion bushels. Going up by 200 million bushels or more per year. Okay, massive growth. Export, why did that jump to wheat? I don't know. Because I forgot. There's my typo. Somebody was waiting. This is actually soybean exports. I just keep forgetting to update that. Soybean exports, these light gray lines right here are our path of exports over the past 20 years. And the orange line is this year. This is the weekly export numbers. So basically, we're not at the record, but we're in the middle. I don't expect to see at this point a big adjustment in our exports. I think we'll see some. Overall beans this year, 400 million bushels. We hear a lot about 10% stocks use ratio. This number's coming down. We will see some upward revisions in bean exports. We're going to see some upward revisions in crushings. Every year back here, at some point, this number was above 10%, and demand materialized and pulled it down. Okay? Why? Because demand, that orange line, is just so strong for beans. I'm projecting a 45.9 bushel to the acre yield this year. It's a little lower than some. If you want a higher one, we can talk. I can forecast any number that you're willing to pay me to. It's another thing that, great about not being at Ohio State. I've learned enough statistics there to be able to do that. I think 45.9, maybe 46.5, somewhere in that area. That leads to a big decline. The main number here, big decline down in our ending stocks, maybe down to 250. Still a little bit above where we were in 15, 16. But I think our prices, we end up at about a 950 average. That's about probably a 1010, 1015 futures price. Okay, average futures price. So yeah, I think right now futures are a little bit high. Okay. But here's the key point. There's way less, again, at 253 in total use of 4.2 billion bushels. Okay, that's about a 6% carryout. That's not a lot of room for error. Even with those extra acres, there's not a lot of room here for error. Things go a bushel off of that, this gets really tight really fast. And that's the story of both beans and corn in 2017. Yeah, we've got more bushels than we've had the last few years. We also have way more use than we've had the last few years. And it won't take much to upset that apple cart. Okay? So overall outlook in beans, I think they're solid. I think exports are solid. I expect to see them end up at about 2.12 million or 2.12 billion acres this year. Let's continue to see that RFS-driven soy oil demand, meal demand getting a nice boost. Right now, overall livestock industry is in a growth phase. Even with cattle prices where they are, we are seeing cattle numbers go up. I would expect that the events, we're still waiting to see actual counts as opposed to kind of news reports, but actual counts of what's going on in the southern plains. But I expect to see it might temporarily depress cattle prices, but I think that that's going to be positive. We'll continue to see, by and large, animal numbers increase. Certainly pork and poultry, we're going to continue to see increase. So I think long-term price outlook for soy is by far the most positive of the big three crops. Old crop, I'm worried about the South American harvest. I don't like storing beans, old crop beans, into March or beyond. Okay, I just don't. There's too much risk. There's too much variation. If you really, really want to keep some exposure, what you're really doing at that point is you're playing the national exposure. Okay, you're playing national prices. That a meteorite hits Argentina or something like that. And if you want to do that, the cheap way to do it, buy a call, buy a 1050 call, or 1060 call, something like that on the board. Don't sit and just store beans. It may work out 1 year, it may work out 2. Over multiple years, it doesn't. I think current run-up continues to be a good price for old crop. New crop, lender pressure, relative prices. Like I said, I think beans gain now even more than 3+. I forgot to update that number. I do get a little worried about this. I think at some point, late March, there's going to be a lot of volatility around. Last business day of March, we do that prospective plantings USDA survey-based report. There's going to be a lot of volatility around that because up to now, there's competing narratives. There are a lot of I-state producers and analysts who think that those USDA numbers are overstated because they look out their back door. They talk to the farmers across the street. And those guys are like, I'm staying in corn. And you know what? If you're in northern Illinois, you'd better stay in corn. Okay? There's a huge amount of academic research and really practical research that, People pay way too much attention to what we see with our own eyes. There's one of the best studies ever on this, looked at rain during the drought, during droughts. Whenever there were droughts, the most important rain was rain that fell in downtown Chicago. That did more to depress the prices of crops than rain anywhere else in the Corn Belt. Why? Because the traders saw it. Okay, and that's absolutely true. Okay, so I think that there's still some competing stories out there. I think they're going to resolve towards these acres. But there's going to stay competing stories out there all through planting, particularly as weather stays like it is. I think for new crops selling here, I believe we will see a dip into spring. After we get the acres planted in April, early May, whenever we get them planted, if there are no major planting disruptions, we're going to see prices decline, particularly if planting gets in early. Everything leads me to believe, obviously, it can still rain a lot, but a lot of the other factors are setting up nice for an early planting. And so if that's the case, I expect to see a lot of pressure on prices, a lot of people saying, oh man, imagine if we have 2014 yields on this, or even 2013 yields on this. What happens then? And people are going to focus on that, and it's really going to put a lot of pressure on prices. I wouldn't sell everything now, but I do think you're going to want to start your sales now on your new crop. Get some selling in. I think that it is going to be much easier to see $8.99 than $10.99. Neither of those is a forecast, but I do think that it would be easier. And I think we're going to see an extra 1 to 2 million acres of beans per year for the coming 3 years or so. We're going to see a sectoral shift in the United States crop allocation towards beans. Lower cost of production, continued demand growth, profitability is competitive, particularly in the non-central corn belt, okay, outside that central corn belt. Don't take that as a bad thing. Don't take that. The key thing to remember, what really matters, and I didn't go through it here, what really matters in agriculture is not bushels. People get too hung up on bushels. Okay, we get hung up on how many bushels we send to China or to Indonesia or to Mexico. What really matters is not bushels, it's acres. Who here on the farm that they're running now, who here was that land running the same allocation of acres 40 years ago that it is today? Remember when you updated your base acres after the 2002 Farm Bill? The number of people, even in Illinois, said, wheat? When did I grow wheat? Okay? Things change. What matters is that acreage. And so we may see a shift from corn into beans, but it's okay because what matters is the production of that ground. That's what the demand is for. Okay? I think we're going to see most of these acreage losses from corn. Why? To offset that yield growth I talked about earlier. That increasing speed of yields in corn without the similar demand increase in yield or in demand. Some of it will come out of wheat. Year to year, you may pick we may have a little bit of cotton coming and going depending on prices that year. Right? So, biggest single threat to all of this is Donald Trump's Twitter account. Okay? The reality is, as we talk through all of this, guys, and we talk about crops, we talk about prices, trade matters a tremendous amount. Okay? And it's not a really easy thing to deal with. The one thing I'm convinced more and more about is the one thing that truly sets what you do apart from any other small business is its complexity. There's no other business that 3, 4, 5 people run that has to worry about things like international trade agreements, that they have a direct effect on what you do, but they do. The reality is 2 billion bushels of beans getting exported. Okay, 2 billion bushels. Let's see, 50 bushels to the acre. Let's keep the numbers easy. That's 40 million acres of beans getting exported this year. Stop and think about that. Ohio, we grow about 4 million acres of soybeans. 10 times our soybean production. At risk from China, from a trade dispute. Corn, those exports to Mexico, hundreds of millions of bushels. Hundreds of millions of bushels. Not quite the same effect as exports to China, but across meats, across fruits, across everything. That's why I think this trade is something that if you are involved in an association, if you're involved in any sort of leadership in the ag industry, it needs to be something that's paid very close attention to. Because the other reason I think it matters to us, not just how much we depend on it, the political sensitivity. Okay? The history of trade negotiations, the history of trade retaliations is you hit hard. You hit to where your opponent is the most vulnerable. And if we go back and look through trade fights that the U.S. has had over the past decade, agricultural production is always one of the targets. Okay? In the United States, rural areas in general voted over 80% for Trump. Soybeans are an easy target. They're not a huge international target as far as dollars are concerned, but they're an easy, politically vulnerable target if China gets into a fight with the U.S. or U.S. gets in a fight with China, either way. Okay? This matters. This matters a lot. So keep that in mind. It is not trivial. There's a lot of long conversations. I realize I'm compressing it there. But anything we talk about marketing, anything we talk about that, a single trade fight can outweigh any of these other conversations.